this is a question that has been asked by a lot of people. And the question is, when starting a business and when they're thinking of structuring it, what are the benefits of using a company as opposed to a trust, or vice versa?
Yeah, thanks, Dinesh. A good question. And, when we're starting a company, we try to keep it simple, right? I mean, we can make it complicated. I've seen structures where there's hundreds of entities, and I look at that on a page and say, why do we have so many entities with trusts and unit trusts and partnerships? So we try and keep it simple in the early stages. And generally, the benefit of a company is that you're getting asset protection, because we look at asset protection as an important aspect of it, along with tax as well. And then, at the moment, we look at tax rates in Australia. We are trying to get them down. I think under 50 million turnover, if I got my numbers right, you're at 27.5% tax, right? So the benefit of companies, you've got company tax rate, you've got the asset protection, separate legal entity, easy to transact. So in a business world, we normally go down the company path. And with trust, we normally associate trust with investments or with family activities or family business. And sometimes we get the hybrids where we'll have a company owned by a trust. So that gives you the real flexibility in terms of running the business in a company environment that's got the separate legal entity status, and then being able to derive dividends from it and move it out through a trust, right? So trust law is part of our system, right? Obviously, there is other structures as well. You could be a sole trader, you could be a partnership. So sometimes we'll say to a client, if in the very early stages, they might start as a sole trader, but pretty quickly, as soon as you're dealing with suppliers and customers and regulators and banks and so on, then we are moving to company structure. So we tend to assess the structure on the merits of the situation and the intentions of the client. So we normally have a discussion with the client, see where they're at, what do they want to do? Are they an early business? Are they maturing? Are they in a succession state? We might restructure their affairs depending on accessing concessions. So it's horses for courses, right? One last big difference, I guess, and I don't think I mentioned this: companies pay tax at 27.5% if you're under 50 million, or 50 million at 30%. Trusts do not pay tax in their own right. So the benefit of trust is that the beneficiaries pay the tax, and that gives you flexibility. So if you've got a big family with lots of children and you're running a business and the children are over 18 years old, then you're getting into some good tax planning opportunities where you're able to distribute and save some tax. So that's one of the crucial differences. And trusts have been on the radar of past governments, and the Labor government has looked at it. They don't like some of the rules around trusts, and it's considered to be the domain of the billionaires and the multimillionaires, but that's not really true. It is used quite widely across the board. And most of our clients that we see will have trusts as part of their structure. So hopefully that gives you a flavor, but we do need to review on a case-by-case basis.